Hey there, and welcome back to another episode of Kry Finance, where I'm your host, Kry. And if you don't like that, you can cry about it. But remember, we're here and we're talking about trading tears and fears for clarity and composure in this market. So let's leave all that noise behind and dive into today's key insights. Now, let's start off with some key data points from today. Initial jobless claims came in at 225,000, which is a bit higher than the expected 222,000. We also had S&P Global Services PMI come in a little worse than expected, 55.2 versus the 55.4. Now, this is basically, both of these numbers are in line with what we expected. Yeah, some news outlets might say this was much higher than expected and therefore the market dropped today. But really, this is in line with expectations. This is not really going to move the needle too much. On the geopolitical front, we had President Biden today say that he doesn't expect Israel to retaliate immediately against Iran and rejects the suggestion the U.S. would grant permission for such an attack. Now, Israel did not attack Iran directly. However, they had an airstrike that they carried out on Beirut, which is like a proxy war, proxy area for Iran. So it's not a direct attack on Iran, but it is an attack nonetheless. So it seems that Biden's comments are aging just as poorly as he is. Okay. Jumping ahead, we have the reports coming out for tomorrow. We have the unemployment rate number coming out tomorrow. And we also have non-farm payrolls coming out tomorrow. So these are two very big reports. These are going to shed a little bit more light, hopefully a large amount of light, on what the Fed's policy direction is going forward. They have suggested that they're going to do smaller cuts, but there have been rumblings that they will do another 50 BPS cut at their next meeting. Now, the odds are very low of that happening. However, last time the odds were low that they were going to do a 50 BPS cut, and the news media decided to just push that narrative so much so that the Fed collapsed on their confidence and just went for the 50 BPS anyway. Okay, so that does it for the news for now. Okay, so going into the charts, we have the S&P SPX here. We started out basically down in the hole here. We dropped down to about 56.90 before coming back up to the 57.18 level. And then we just did this dance between 56.85, 56.90, and about 57.05 throughout the day. Now, we did drop below that 56.85 level here, but again, once we got below that level, we just came right back up. So really not too much to say about today's market other than that it is just continuing this sideways action, which tells me that we are waiting for something. This market is waiting to see how investors are going to respond to tomorrow's reports, or it could be the Middle East, but we'll have to see as things unfold. But our next indicator on where this market is going is definitely going to be that 8:30 data in the morning tomorrow. Okay. And this is also, if the data comes out tomorrow and it's worse than expected in the way of making a more hawkish Fed, okay, because worse data actually is good, because worse data means that the Fed will be more dovish, will have a much heavier rate cut policy. But if the data is good, then we will go down, because then the Fed does not need to cut to support this labor market, which they say now is their main objective, apart from inflation. But inflation to them now is on the back burner. So if we see those numbers come out worse than we expect in the way of Fed cuts, not being as severe as initially thought, the market should come down to this median band, which is about 56.46 on the day today. Okay. Moving along, we're going to shift into JPMorgan Chase. Okay. So JPMorgan really not doing too much. However, it is important to note that they are on the weekly time frame, weekly interval. They are breaching this 50, excuse me, not 50 day, the median band here. Okay. So breaking this median band or touching this median band, and if it breaks lower, we could see JP Morgan, as we discussed yesterday, that JP Morgan could revisit this 192 level that we saw back here in August. Okay. Now, this median band is important because every time we've gone below it, we've come right back above it. So it'll be interesting to see if we do go below that median band, how long we'll actually stay there for. And that could be actually creating a buying opportunity for investors or traders, depending on how fast this thing snaps back up, if it does snap back up at all. But the way things seem to go around these parts, JP Morgan seems to do pretty well right after it drops below that median band. Okay, another chart I wanted to look at is JOBY, Joby. Okay, we talked about this one yesterday. Let's zoom in a little bit on this. All right. So JOBY was interesting because they had that investment from Toyota, if you recall, yesterday. And that was announced, and boy, did they have a day yesterday. They were up about 25%, give or take 1 or 2%. And they closed around this level here. Okay, this like 612, I believe was closed. Maybe I'm off by a point or two. But today it just dropped like a rock right out the gate. So not really feeling it today with JOBY. However, it did just drop and then sat at this 561 level. And that is interesting because this could just be some big investor that decided, I'm out, and everybody else kind of held on. When you see a big drop like this, sometimes you see it just dwindle down throughout the day, but we didn't see that. We saw it hold up here above 550, which is a really good sign if you're long. So this is an interesting one to keep an eye on. We did point this out yesterday that the last time that JOBY was announced to be invested by Toyota, they jumped up to, if we zoom out here, again, this is just a quick little observation here. They jumped up to this $12 mark here, and then over time, and these are monthly candles just to really show what's going on. After that Toyota investment was announced, it came right back down to this $5 level, okay, this $5 area. So the fact that we're seeing some more investment from Toyota, it was $500 million. That is significant. However, we're going to see how significant that actually is in the long term. So definitely something to keep an eye on here with JOBY, but for now, it looks like we're just hanging out below 6. Moving on to Palantir. Palantir had a really amazing day here. They really just did their own thing. Yeah, they might have traded a little bit with the market swings, but at the end of the day, Palantir closed up about 4%. It was $1.43 that they closed up at 39.26. Okay, so that is really good for Palantir. I didn't see any company-specific news. However, it seems like this one is benefiting from the S&P inclusion that recently happened for them, and also this Israel-Iran conflict in the Middle East. So really just got to keep an eye on this one. It's going to probably continue to rise, definitely close to 40. We're going to be seeing it testing that level at some point in the near future. It could even be tomorrow, but we'll have to see how it responds or how it handles those reports tomorrow, being the unemployment number and the non-farm payrolls. Right. So when we look at this and we see it rising, we have to assume that there's one main driver, and then there's other things that are, or there are other things that are pushing it up. And I would say that right now, that S&P inclusion that I just mentioned, that is probably the main driver here. And then these Middle East tensions, that's most likely just gravy for the share price. So bravo to anyone that was long on Palantir. You did well today, and should keep seeing some more movement there. But again, this show, we'll just use this moment to talk about it for a second. This show is not investment advice. This is simply educational, to show you what's happening, informative, what's happening, educational, how to read these charts a little bit. It's not investment advice, and you should do your own research. And all of what I'm talking about is just interesting. Okay. All right. So now let's talk about what's driving trader sentiment today. We have the fear and greed index that was at 67 at the close, and that's leaning into greed. So a week ago, we were at greed, a month ago neutral, and 1 year ago extreme fear. So that's interesting. We don't really remember that too much, but yeah, a year ago it was pretty rough. And then they talked about the Fed pivoting and in the end of October, and that really started to move things along with this market. But now we've got the Fed where it's actually pivoted and we're in this greed area. So we'll have to see how things shape up here, but we are seeing the junk bond side some extreme fear, which indicates caution in the riskiest assets. So that's down here, and it's kind of a mixed bag. Even though we've got greed as our indication here with a 67, there's definitely a story to be told. I mean, the VIX is above its 50-day moving average, so that's something to note as well. We could be seeing, kind of a coiling happening here. I know it's hard to see because of this massive spike that happened with that JPY unwind or carryover trade. And but really, if you assume that that was maybe about this level here, 28 or so, and you just picture it just closing in to I don't have a way to do that, but closing in, higher or lower highs and higher lows. That's really what I'm trying to say here. So it's going to coil and it's going to move one direction or the other. And that's interesting to note. So keep an eye on that. Keep an eye on that junk bond demand. And the put call ratio also indicates greed. Don't really have too many people buying puts. So it's a good sign if you're trying to go long. However, the S&P is way over its 125-day moving average. So we've got to just, pump the brakes a little bit. Sometimes the best move is no move at all. Okay. So that's it for today's episode. As always, I'll leave you with a closing quote for the day. The most important rule of trading is to play great defense, not great offense. Paul Tudor Jones. Keep that in mind and stay sharp on your trades. All right. So thanks for catching today's edition of Kry Finance. I'm Kry. Have a good night.